Hello everyone. Semiconductor stocks slid across Asia, dragging regional equities lower as renewed weakness in the sector rekindled concerns over stretched AI valuations. The Nikkei 225 index retreated to its 50-day SMA, while Bitcoin also came under pressure, struggling to build on its recent breakout above 65,000. Meanwhile, pound-dollar remained near a two-month high after a modest uptick in UK GDP. This is your midweek technical outlook. Now let's get right to it. Now let's start with the Nikkei 225 index, which is currently extending this pullback from the record high notched in late June and attempting to find support near the 50-day SMA near 66,600. Now, the index has also fallen below this medium-term ascending trend line drawn from late March lows. And it's also dropped below the key 20-day SMA. Now, should manage to find support at the 50-day SMA, and the next key resistance level to watch is the 69,250. And after that, a break above the 20-day SMA in the ascending trend line could then target the monthly lows near the 70,300 level, followed by the July 1st 72,000 level before it heads again to reclaim a retest of the record high. Now, to the downside, a break below the 50-day SMA might retest this 1 month low, which was touched on July 8th near the 65,250 level, and weakness below this area might then target the 63,100 level, where the June lows are located, which has been capping losses since late June. Now, the index is well above the 200-day SMA, so the upside is still sustained despite this breakout. The momentum signals are reflecting this consolidation within this downward sloping channel that's been forming. They're not indicating aggressive selling pressure, but they are signaling fading bullish momentum. The MACD is retreating toward the zero and below the signal line, and the RSI is flatlining marginally below neutral, suggesting that this consolidation within this channel might continue for now. Now let's also have a look at pound-dollar, which is currently holding pairing gains near this 2-month high, near 1.3545 notched in the previous session. The pound-dollar has posted an impressive rally in the previous session, and from this 6-month low, it has retraced this pullback from early May to the late June by nearly 80%. As price action is currently hovering at the 78.6% Fibonacci retracement. So should it manage to surpass this area, then resistance above the psychological 1.3600 level might come from this 11-month high near the 1.3650, where the May highs are located. Now, to the downside, support below the 1.3500 level and the 1.3460 lies near this key area, which was a stronger resistance area, now turned support, where this SMA cluster lies between the 50, 100, and 200-day SMAs, where these SMAs converge near the 1.3340. And below that, a further weakness could culminate toward this 20-day SMA area, where this uptrend line also lies near the 1.3300. Now, the momentum signals are reflecting the bullish bias. They're improving from the MACD is improving from negative territory. Stochastics are heading towards the overbought area. The RSI, though, is easing just below the overbought region, reflecting this consolidation now in the bullish bias before the next leg higher. Now let's also have a look at Bitcoin, which is also under pressure after this range breakout from this month-long range. It is struggling to keep gains above the 50-day SMA and above the 65,000 level, which was breached briefly in the previous session. Now, this weakness, should this weakness continue, and it could target a drop back below the 50-day SMA near the 63,700 level, and further below, back below the 20-day SMA, which was holding price action. It was a strong support area intact since the 3rd of July near the 62,000 level. And then further below, the psychological 60,000 level should also help cap any further losses. Now, to the upside, resistance above the 65,500 level might come from the 66,700 level, where this false breakout previously occurred from this range, and the upside stalled in this area. So this could be another case of another false breakout. So we do need confirmation above this area to confirm a range breakout, and perhaps further even above the 70,000 psychological mark where the 100-day SMA lies, so that we can revive some upside momentum to this to the crypto market, which has been holding this bearish bias since the beginning, since the end of since October, since the liquidation crash, and throughout the year to date. The momentum signals are reflecting that this upside has been stalling the RSIs for flatlining at just above neutral. The stochastics are also muted just below the overbought, suggesting that this upside could consolidate before its next move higher. Now that's all for today's market wrap. Thank you for watching.